it, and who better than N. Jayakumar, MD at Prime Securities, joining in on the show right now to talk about exactly that. Jakes, hi, good morning. Great to have you on the show. A unique world we are living in right now. Most asset classes doing well. Global markets other than ours doing really well. For us, of course, while the earnings revival is in sight, index not really displaying all that. But then, of course, overnight you got that first sign that maybe the Fab 7 too can cool off and they're not as big to fail. What is it that you think an India investor should be doing in such a moment?
Thank you for having me over and good morning. The way I see this is that a lot of reversion to mean kind of moves are happening. I think we've had an excessive sort of movement of money away from dollar assets or not dollar assets as much as the US dollar into other assets like whether it was the cryptos or it was gold and silver, etc. I think that trade, which sort of reached a euphoric move about a couple of weeks ago, has started cooling off. So whether it's the precious metals or it's or it's the euro, the Bitcoin, crypto kind of moves, which have cryptos, for instance, corrected almost 18% from the highs. I personally think some amount of reversion is happening. Even the dollar index went to a low of 96 and a bit. It's now today close to 100. So, and the reason this is happening is that much of this was predicated on tariffs at these inflated levels, with talks between the US and China, US, India, etc., reaching close to decision-making levels, and some amount of thawing happening in tariff talks. The pressure on the US dollar should logically cool off because the thought process was that with high tariffs, it will be inflationary in the US, yields would go up, their ability to refinance the US debt would be limited, and therefore the pressure on the US dollar. That thesis has kind of, whether because of court proceedings, because in the courts, I don't think there's much favor for these tariffs, or it is the realization that the US public is having that they themselves are bearing much of the expense on these, on at least on the tariff front, and it's not that some foreign country is paying for these tariffs to export into the US. So cooling off, whether legally or because of market forces or bilateral discussions, means that a reversion to mean on a bunch of assets will happen. It's happened in, as I said, in precious metals and cryptos. And to that extent, I think this perpetual sort of almost incessant round the year selling that the FIIs have been doing in the Indian markets may also have reached a crescendo. I think some amount of, they may not turn aggressive buyers, but I think selling for sure will abate. And to that extent, local liquidity should propel our markets to new highs. But it's a slow process because we also take cues from the way overseas markets have been performing. Whether it's Korea, Japan, or the US markets, they've been hitting new highs with consummate ease, if you will. And I think those markets will cool off and some money will return to the Indian markets. That's the case that one is basing our discussions on.
Sure. But in the interim, Jake's, just getting back to the point that you were making about the cool off in the global markets overnight. We were quite decoupled in that sense on their way up. How linked are we going to be once they ease off and ease off further if from these levels?
In all honesty, we are never decoupled. It's just that on the way up, people found, as I said, far greater and compelling logic to buy into, let's say, China, Korea, etc., which were benefiting both from a currency move and valuations. To the extent that those markets have played out quite a bit, it is a matter of some money coming off the table. And the shorts that were here, to that extent, I feel we will see the covering of the shorts and maybe some new money coming in. So I think we are coupled to the extent that if there's a large scale kind of 10-15% fall in overseas markets, it's not that we are going to rise in the face of that. But if the markets there cool off, chances of money coming in here are a lot brighter. I think the case for equities, it is ultimately an X amount of money that's moving around the markets. And to the extent that it is at the margin money, not long-term money, it has a disproportionate impact both on the way down and on the way up in these markets. So just like the rally in, for instance, the Korean markets in the last year are up 60%. I mean, that's like a sensational move in dollar terms. Now people will take chips off the table there and move elsewhere. And because valuations were against us, you've had, in that sense, selective buying. And therefore, you move into a discussion which focuses on which sectors to buy, which is why you may not have an index which will take off. But if some of the key sectors there, like banking, financial services, PSU banks, etc., get money because of performance, because of a whole bunch of things that have happened and corrected over the last few years, especially the balance sheets. My own assessment is that stock and sector-based buying will be back, which will include money from the foreigners, not just local liquidity propping these sectors up.
If the money is going to come to India, which are the sectors where you see that money coming in?
So the sectors we like, I think PSU banks, and especially there's been some talk of a higher allocation or a higher percentage holding allowed in public sector banks. That's been in the works and in the air for a while. But the big tailwinds in the banking financial services is foreign money coming into private sector banks in India. Whether it's the case of an NBFC like Saman Capital getting money, or it's federal bank getting money from Blackstone, or RBL getting this absolute game-changing 60% from Emirates NBD, or a Yes Bank getting a Japanese suitor. So you have smaller private sector banks, smaller players getting money, and I think that's going to be the way forward. In the context of PSU banks, which have cleaned up their books, which are trading at between 8 and 10 multiples at best, if you take a pure PE multiple, I think valuations in the PSU banking space are cheap. So money within the system, I think, will move to PSU banks and small private sector banks. That's the space we've liked. That's one. The second is it's difficult to play the AI theme in India. So the one way that people have been playing the AI theme, which is disruptive for businesses, etc., has been to actually sell the IT services companies and look for niche opportunities in AI-enabled, let's say, whether it's telecom infrastructure or it is AI-enabled services like, niche businesses in the BPO space, or maybe product companies or data centers and networks and tower companies. I mean, these are basically telecom networks. I think in some sense, money is being moving to sectors that are under-owned and underappreciated. These are the sectors we like. But the way people have played AI is not a positive way in India, because there's no AI company in the way that we understand in the West that's listed in India and can be played. But people have chosen to actually come out of IT services, etc., which could get affected by them, and move into smaller niche plays if possible, or just stay out of, just saying that there isn't an AI play in India for the moment. Other than that, people have played the platform companies. So you've had the Eternals of the world, or Paytms, etc., which have been seen as platform companies that have used technology, that have used buyer behavior analysis, deep tech, I would say, to a limited extent, but AI to the extent it's being used as ways and means of seeing whether these platform companies can be proxies for some of the tech play that we've been having in the rest of the world. So I think the age of sector specific or stock specific plays have started. So there are a few, as I said, companies in each of these spaces I mentioned. I've chosen specifically not to talk about specific stocks, but I've kind of hinted to the the sector and the sort of specific areas they are focused on. So these are, as I said, some of the things. So private sector, small private sector banks, PSU banks, data centers, networks, infrastructure, telecom infrastructure companies, and some of the platform companies could be one way that we could play the emerging theme. And of course, one of our older favorites, which is the generic pharma space, which I think, especially with the clarity around tariffs coming through, could be a huge beneficiary of low prices to the US consumer, which is something that they are actually seeking quite desperately.
Okay, Jakes, so much more to talk about, but next time when you make it to our studios, we'll have a longer chat. Thanks for your time as always.
Thank you. Thank you.